Well, China decided last month to adjust its currency, and that set the rate for the yuan at a 4-year low against the U.S. dollar. Now, the move may have rattled financial markets around the world, but for American consumers, it could mean some cost savings down the road.
When U.S. retailers like Toys R Us manufacture their goods in China, they tend to sign dollar-denominated contracts in which they agree to pay their Chinese suppliers in U.S. dollars, not the yuan. The depreciation of the yuan against the dollar means the cost of production for Chinese manufacturers will drop, but U.S. retailers may benefit too. According to Giuliano Iannacone, a corporate lawyer who specializes in the retail sector, manufacturing contracts often include provisions that enable retailers to renegotiate deals if the currency moves outside of a pre-established range.
In renegotiating, the U.S. retailers might be able to obtain sourcing at a much or significantly lower cost and effectively sharing the benefit that the devaluation otherwise would only provide to the Chinese manufacturer.
Toys R Us is reportedly trying to renegotiate with its Chinese suppliers. Two other large U.S. retailers, Best Buy and Home Depot, which rely heavily on Chinese manufacturers, also expect to benefit from the devaluation. While some of that cost savings could be passed on to shareholders, analysts like John Harriman say it is likely U.S. consumers will also see cost savings.
We tend to see a lot of competition amongst whether it's the online people competing with the department stores and the electronic stores, or even amongst themselves. We tend to see a lot of that cost savings passed on to the consumer.
That cost savings isn't likely to hit in time for the peak holiday shopping season. That's because most U.S. retailers have already placed and paid for their orders. But Harriman thinks in the long run, prices will fall.
I think pricing is going to be extremely favorable to the consumer as we go forward. It's going to be definitely a win-win situation here.
U.S. retailers without currency provisions are likely to push for them. Iannacone thinks most Chinese manufacturers will agree to some sort of adjustment.
I would think that anyone that would be facing a possibility of their relationship being jeopardized by not necessarily sharing in the benefit would take that factor into consideration in maintaining an ongoing positive dialogue with their partners.
Since the devaluation of China's currency, other Asian manufacturing centers have lowered their currencies to remain competitive. And that provides another incentive for Chinese manufacturers to strike deals with U.S. retailers that could ultimately help lower prices for U.S. consumers.